Happy non-farm payroll Friday to you all. Thanks for joining me. It is Friday, the 3rd of February, 2023. It's 8:01 a.m. Chicago time. It is 0 degrees out Fahrenheit. It is freezing here in Chicago. In case you're wondering, it is just one big icy tundra. This is episode number 2406. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's what we've got today for our convergent trading pre-market summary sheet. The thing that's missing here is the rumor that the White House is secretly giving Russia an exit plan on Ukraine. There was a threat from Putin yesterday, which caused quite a drop. That they are, the Germans are sending Leopard tanks into Ukraine, and Russia will be sending more than just tanks, whatever that means. Sounds like a street fight, but it's the only thing that's not included. In case you weren't here, there was a massive beat on the non-farm payrolls. This is a key figure. The non-farm payrolls for the U.S. Came out at 517,000 added jobs. 517,000 was expected at 185,000. The prior was revised to 260,000 from 223,000. So up, up, and up, and up, and up with jobs, and down, down, down with the unemployment rate. The unemployment rate came in at just an astounding 3.4% versus 3.6 expected. No adjustment to prior. And then the other piece that's really important in today's release is the U.S. average earnings, which ticked up, where they were expected at 4.3%, and they came in at 4.4%, but that's still lower than the 4.8% prior, which was adjusted up. So really huge beat. I mean, by a factor of 3 on the non-farm payrolls. You don't see that often, but we did sell off. But notice it's not cratering. And it's had a really hard time getting through that 136 area, 4136. If you're a Convergent member and you're listening, you saw that comment in the Maven channel right before the release. The key areas are 4190 and 4136. The low of the day so far is 4135. It's really struggling. Tried for the short side, and I got to tell you, it had a hard time going lower. It was just a very tough grind, and we've been in a consolidation all along. The SOC, do you remember what SOC means? The SOC for non-farm payrolls on the ES is 4170. 4170 and a quarter was the very last print before the release came out. And we have not touched it since. So we have an open SOC above. That tends to act as a bit of a magnet. So we're going to keep an eye on that. The key magnet in the area is this composite protrusion, which is around 4173 anyway. So the ES has this kind of gravity up above, this magnet up above. Just keep that in mind for today. Anyway, I'm going off topic here. Huge beat on non-farm payrolls, lower unemployment rate, big tech stock earnings disappoint. The least worst of them is Apple, then Google, and then Amazon. Amazon currently down, or was down 6% this morning. Google down 4%. Apple down 1.66%. And those are just weighing down the stock. Tesla down 1%. Microsoft down 2%. Meta, which shot up 20% the day before, is down 2%. Just to keep things in perspective, Amazon, Google, Apple basically took back the run-up that they had yesterday. So they're back to where they were yesterday morning. So not yesterday morning, Was it yesterday morning? No, it was it was yesterday morning. So that's where that stands. European PPI is higher than expected, so there's inflationary pressure there. And then the strong Chinese Kaikian services and composite PMIs. What's left for today is the what is left for today? In front of you, ISM non-manufacturing PMI expecting 50.4. ISM manufacturing employment, no estimate. And then from there to Baker Hughes and Fed's daily later. Looking at the S&P statistics on the sheet, the market's in a multi-distribution profile. So the auction condition is multi-distribution. So there's price discovery going on. The market's kind of moving, consolidating, moving, consolidating. The volume, however, is 400,000, which is well above what we would consider the edge or the limit of what's normal, which is dictated down here, outlined down here. It's 330,000. You can see it in blue. The inventory is 100% short, which means everything, all the volume that has traded below yesterday's close. Below yesterday's close. We have 42.5 points, so we have a pretty decent range in the overnight session, expecting this to be relatively active. Look at silver this morning. Silver down 3.5%, gold down 1.8%. Crude having tested lower yesterday. We'll talk about crude in a little bit, is holding its own. The Nasdaq's off 2%. Overall, the sentiment is mild risk off. Okay, so that's where we stand. Let's take a look at yesterday. Here we are. Let's take a look at yesterday. So yesterday, we consolidated into most of the overnight session. Then we popped higher right before the open. I provided a target yesterday of 41.90, but in retrospect, we were opening so much higher, and that target was way inside the range target or the target range. So clearly we hit that 41.90. Ended up the key target for yesterday ended up being actually settlement, and we ended up pushing to 42.06, was it? Something like that, 42.08. And then we came off. And throughout the day yesterday, the delta was lower and lower and lower. So I made a comment earlier in this or later in the session, later in the morning, earlier in the session, that at some point I expect the late longs to be disappointed into the close. And we can look at this setup here. Well, hang on. So here's the open yesterday. Okay. We were pushing higher and higher. And you could see as we're pushing higher, this thing is in this chop zone that we had yesterday from 41.96 to 41.81, 15-point range. In this chop zone, they were hitting the bid, price not moving, price being absorbed, bids being absorbed, or the sellers being absorbed by the bids. But you cannot deny that there was a massive delta divergence. I mean, imagine if we reset this to the start of the day. So let's do that actually. Let's remove the extended data and have it recalculate. And you can see here that as price sat sideways in the S&P, the delta really didn't see much light of day. It was under zero for the entire session, and it kept going out. So the idea here is that as soon as the buyers give up, as soon as those bids that keep holding and absorbing sellers, which are what are causing the negative delta, as soon as those bids give up and they are done, that may be a program, maybe a fund, work in a position, whatever it is, that we expect the market to flow downwards. And that's what we got. We got a pretty decent rotation of about 51 points, which is quite a lot. I actually thought that the the morning low, 41.53, was actually threatened, and we might see neutral to neutral extreme down. We did not. We ended up bouncing back up to 41.91.50 and finishing there. But very interesting action yesterday. See, look at this. This is the 30-minute. Look at how dramatic this sell-off is. We ended up with a double distribution profile with the point of control at the upper end of the range, and we came right back to the point of control at the end of the session to finish there. 41.90 is extremely important now. So is 40.90 down below. So we have, remember, we go from 50 to 50, and for a while we were going 20 to 20. Well, now it's 90 to 90. This 40.90 is very important. You can see there's a lot of volume here and nothing above it. And then now the 41.90 is very important. And we do have an MC point of control magnet right here at 41.70. 41.70 happens to be the last print before the non-farm payrolls release. So you have this kind of interesting, almost, I don't want to say it, but perfect or kind of perfectionist structure that we've got going on. And what we've been doing is we've been holding the 41.50. So we have battled the living bejesus out of this 41.50 stock zone, this gray band that's here. We traded the heck out of it this morning. You can see we just kept bouncing and hammering and hammering. And then we finally, we kept hammering on it before the number. Then we finally bounced up to 41.70, broke through. And then from there, let's switch over to the active chart to look at what's happened since. From there, it's just been fighting in the zone here. This a massive fight. What we've seen is pretty decent respect for the full session VWAP, full session mid, just pushing against it and letting go. But it's struggled on the way down. So even when the number came out right in here, it really had a hard time holding on to these low prices. You can see it flashed back up real quick, still didn't get back up to the 41.70. So that SOC remains open, and it's just been really resisting selling. So the 41.50 this morning is a price to watch. So what do we have? Let's recap. 41.90, key target up above, key area up above. 41.70 is our MC or our magnet in this area, plus our SOC. This is where the auction got disrupted by the number this morning. This will remain a magnet not only structurally before the number, but now it's the SOC after the number, so it's even more important as a magnet. Then we get 41.50, 41.50, and 41.36, which is exactly where we are now. We are really fighting each one of these levels, and these are likely to be in play quite a bit today. So back to the intraday chart. When we look below, now we're back to the next key level down is this 41.10, 41.09, which was last week's high. And what that does is it sets us off below the 41.10. It sets us off on this thin flagpole, kind of thin string of singles, and very poor structure right back to 40.90, right back here. Okay, 40.90, and the launch point for the rally the other day after FOMC, 40.90. So you can see, what's going on here. So that's the map. The map is extremely well defined currently. 41.90, 41.70. I know it sounds like I'm just pulling numbers out of my, 41.50. They're all 20 points apart, almost engineered to be this way. 41.36, which is a stock zone, and this area right here. Okay, 41.36. And then we do have, this big shelf. If you remember from the non-farm payrolls release, look at this ledge right here, a massive ledge. There was so much volume traded at that exact price. It was 41.25 and a quarter, if I recall. So we have a stock zone for that. But I believe it'll swipe right through, and then the next area will be 4110, which is last week's high. Last week's high and uh, last week's high, and it's the last frontier before we go down this zip line of single prints to 4090, and 4090 is the key price to the downside. Okay, that's the main thing I want to leave you with today. This price map is very important. So as you're trying to catch a rally and you're buying and it's 41.66 and you're buying it, know that 41.70 is 4 points away, and it's the odds for that trade, the breakout trade working for you, is not all that great. So you need to remember these numbers. The best way to do this is to go to whatever charting package you have, be it whatever, Edge Pro X. If you're on Edge Pro X, you should be able to pull these cloud levels on, or have your own cloud levels, or if Sierra, Ninja, whatever, go in there and draw a band or a thick line or something at these levels, because we're likely to be toying with these levels for a good part of today and next week, before we move on and decide what to do next. Okay, so I'm seeing the auction's very clear, seeing very clear structure currently, and today is a waiting game. It's all about, do we get back up to 41.50? Okay, I'm going to sell the 41.50 on a test to look to see if it falls back through. At least take the midpoint between 41.36 and 41.50 as a target. See what happens then, blah, blah, blah. If it breaks the 41.50, then I'm looking for a pullback to the 41.50 for a retest of 41.70, the magnet, the SOC. Very clear structures. I expect it to struggle with the 41.70. If it doesn't struggle with the 41.70 and pushes through, then I'm looking for pullbacks to 41.70 to 41.90. That'll be your gap to settle trade. A lot. I know I'm speaking very quickly and you're drinking from a fire hose, but you know what I mean? Like, having these levels and having a map and the homework done this way and seeing how the profiles line up really helps not only put on the trade, but it helps you hold on to the trade, which is, I don't know about you, but most traders don't have an issue doing the homework and doing the technical analysis and so on. Most traders have an issue holding on to good trades or planned trades. And the way you do that is you stay strong-footed in your price map. Your price map is key to your trading. It really is. It's not your moving averages or whatever. Your price map is key. We're trading price. We're not trading a 20-period average of price. We're trading price, and then use those other tools, indicators, whatever, to support your execution or your decision making or bias. Okay, this is really important stuff to understand. If you take anything away from what I'm talking about, it is this portion, the price mapping, the looking at the context. This is what makes you a strong trader. Here's what we had from yesterday. Very thin run up the day before. Yesterday was the prior day was clearly a break from balance. Been in this zone here. We broke away, so we expect it to push up. We expect a continuation trade. We had a bit of a balance yesterday. We ended up with a double distribution profile, really. Again, 41.90, 41.70, and then now we're in the FOMC range, the upper end of the range. So what we're looking for this morning is, do we start pushing up? So it's really important this morning to monitor to see, do we push back up into yesterday's range, where the low of yesterday's 41.53? Do we push back into yesterday's range? Are we responsive? And if so, what does it do in the 41.50? If it pokes through the 41.50 and pulls back and sets up a nice little base, a nice little zipper, and starts pushing to that high, that is a long for 41.70 and for a gap to settle to 41.90. Could be a really big trade for today. Nothing's guaranteed. Past performance is not necessarily indicative of future results, but that's what I'm looking for as the key trade to the upside. And again, I'm going to say it again. I know I'm repeating myself a lot. 90 and 70 if we get through the 50. If not, if we push to the 41.50, 53, then we roll over. We take out the opening swing low. Then guess what? Now we're looking for a short in the range of as close to the 50 as possible, but in the range of 40 or so. And then we're looking for a push down to what price? What's the price we're looking to push down to? Pop quiz. I can't wait for your answer, but the price we're looking for then is 41.10. 41.10, that high from last week. Boop, boop, right there, right? And then we start cleaning up these singles. If it does not hold 41.10 and it pushes to 4,000, 4,100, fights there. If it breaks the 4,100, you have another opportunity for 10 more points to 40.90. Okay? Good ranges, good volatility, good structure, ideal trading conditions. Right now, doesn't guarantee success, but the market is presenting these opportunities very nice and clear today, in my opinion. And hopefully you can take advantage of that, okay? See? It's very logical. And this is what we call the narrative. Like, here's what it's done, and these are the areas that we're looking for, and these are the big trades of the day. It's responsive. Okay, let's see what it does at 50. Take the trade in the 50 area, look for the 70. SOC's closed, likely to chop around in there. If it continues, then we're looking for 90 for a gap to settle trade, blah, blah, blah. That's my trading plan. There it is. The setups, everything. You've got it all, right? So real quick for crude, I wanted to talk about this for a second. Crude, classic. This is yesterday's video. You can see there's me to the left. So this is yesterday's video, and I talked about this being a one-tick failed auction from the day before. It one-ticked the prior day and finished very weak. And so yesterday's plan is push back up to the 77, right? The over-under line, and then look for it to get back into the 75 handle. That's where this is coming from, right? And here's what Crude did. And this is just an example. This is a kind of further reinforcement for you to see how this is this kind of operates, and so that you can start to become a believer maybe and pursue this path to trading, because it's how big traders trade. There it is. There's the 77. So this yesterday we opened just outside the range, push back up right into the 77. See that? Went to like 76.94 or something, and then rolls over, right? So we have range extension up, rolls over, range extension down, goes to 75 and pushes through and puts in a low at like 74.90 or something like that, 74.95. So it tagged 77 and 75 on the dot. Now Crude has reinforced this LIS at 77 if you're trading crude. Okay, I'm going to leave you with that. Good luck today. I will catch you on Monday. Mind your risk. It is non-farm payrolls, so whatever's going to happen is likely to happen within the first hour or so, and in the last hour of the day. The non-farm payrolls day tends to markets position very early and tends to be choppy, so be careful there. Just mind your levels. Good luck. Don't forget to hit the like button. Don't forget to go to the subscribe link at the top of your live chat. If you have not subscribed to the channel, click on that link. Confirm you want to subscribe to the channel. You're just subscribing to the YouTube channel. This is not a subscription to Convergent and the chat rooms and the statistics and all that stuff that we offer there. This is just a subscription to YouTube, which gives you an alert every time I post a video or start a live stream. So please do that. Hit the like, subscribe, and mind your risk today. I'll catch you on Monday morning. Take care.